And going back to the lead-in story on tech and how you're going to have the worst earnings in 6 years, it's been a good 6 years since that time, so let's put that in perspective. But again, the market wants to see that there's not going to be a recession, especially given that part of the yield curve inverted last Friday, and it's just looking for any kind of signs of green shoots for growth as we go into the second half of the year.
So, I mean, Mike, green shoots for growth, are we seeing enough of them to have seen the market run up so far, so fast this year?
You know, I think most of the rally you could probably chalk up to the Fed pivot, the fact that the market was so overdone on the downside. I don't think it's been rising on this economy is accelerating or is about to accelerate.
So little in the way of data.
Very little in the way of data, but also, I mean, if you look at the kind of stocks that have been working the best, they're not necessarily, at least in the last few weeks, tethered to how strong the economy is. Today, you know, you got a weak housing starts number. Today you had this backsliding in the consumer confidence index, which, you know, I don't think it, again, says that things are falling apart, but it doesn't really do anything to dissuade people who feel like we're in a prolonged soft patch.
Everybody's looking at the yield curve and saying that part of it inverted and that's a sign of recession. That's true. It works with a significant lag, but it's not magic. A lot of things happen before you go into a recession. Credit delinquencies pick up. That's not happening. Credit stress indicators from the Chicago Fed that measure 105 different credit stresses, and banking, shadow banking, and the financial markets start to tick up significantly. They're at a cycle low. Household debt service ratios pick up because people can't afford their debt. That's at a cycle low. So all those things that typically show up when a recession is imminent, and a lot of times we choose to ignore, are simply not showing up, which is why I've kind of been a permabull for the last 10 years. As long as the credit markets are open, and they're open, you're going to have positive economic activity.